Please like, subscribe, share if you get value from this. Looking at the oil priced in yen, we're back up over 1,500. We're really at the point where global supply is going to start being constricted here. We are close to 30 days into the conflict since the strait has been shut down. And really, that's the transit time that a lot of this oil would have taken to get to the farthest places. So now no more of that oil is coming in. Now is when I think you're really going to start to see the effects of that take place. Japan has been releasing their reserves, but that really hasn't done much for market price. We've seen some reductions every time Trump has come out and said, it's over. We're opening the Strait of Hormuz, the markets plummet. And then inevitably Iran or us come back out and say, never mind, just kidding, strait's closed. Whipsawing the market around, removing longs and shorts. Anybody that's got the leverage, they are taking care of business. So, waiting for, really, we want to see oil back up at $18,000 per barrel. I thought in the beginning that it might only take 12.5, 1,400, somewhere in there, for Japan to have to move. But with the strategic reserve that they have, I think they're able to kind of quell that a little bit, at least for their local economy, and hold off inflation. But now that we've seen, what would have been the new shipments landing there, no longer landing there, and the longer that this drags out, it's going to have to cause an issue. I think the damage has already been done. Like I've said, there's already a huge disruption in the supply chain. Even if they open the strait tomorrow, it's going to be at least 30 days before that oil starts moving back through there. They're going to uncap wells and start production again. A lot of the storage facilities there in Iran are getting full. So they are also capping wells. They're shutting things down. They're not pushing, the oil out. Also talks about them shutting down the Strait of Oman on the other side of the peninsula there in the Indian Ocean and the Gulf. If that were to happen, or they cut these underwater sea cables, I think that you're going to see the conflict escalate. Again, praying for all the people in that region. I don't want any collateral damage or death or issues. However, this is the catalyst that really backs Japan and the global economy into a corner where they're going to have to pivot to this new financial system, which obviously I have vested interest in and believe in a certain outcome. Yen versus the USD, we're hanging out at 159, back close to the real danger zone of 160, 161, 162. That is where I think we're going to see intervention by the Bank of Japan. We do have about 7 days until we're going to see their monetary policy come out. We also have the FOMC meeting for the Fed here on the 29th, which will be about 24 or 48 hours after the Bank of Japan issues their financial guidance for the markets. Fed also looking like they may end up having to raise rates. That is not good for the economy here. You've got credit markets in a situation. People need liquidity. People have bet on interest rates coming down, leverage themselves so that they can refinance. We've got global debt at an all-time high. The largest percentage of holders of equities are now 70 years plus in age. There's a huge discrepancy between 40 years and younger and 70 years and older. Traditionally, that's been somewhere between 5 and 6%. So there's 17% of the entire stock market is held by people that are 70 plus, and only 3% is currently being held by people that are younger than 40 years old. Just for perspective, that was much closer to like 6% back in the early 90s and 2000s, the discrepancy between the two. Obviously, people that are older have had more time to invest in stocks and are going to hold a larger portion in comparison to somebody that's in their 40s. But that just shows the large discrepancy between those that are that age and the younger generation, and also kind of highlights the wealth transfer that's going to be occurring in the not too distant future. Inevitably, we are all going to pass away. A lot of what we do at Digital Ascension Group is work with people so that there's continuity. You have next gen planning, and all those assets pass and then go through probate. They're structured the right way. So, if you are in that demographic, awesome to be there. I think you're living your best life. Boomers have had a really good run, and probably the ones that are watching this are invested in crypto, and I think we'll continue to have a good run. And then you also have the BIS giving their guidance for these assets. It looks like in May here, we're going to get some guidance around BTC, ETH, Solana, and XRP. I wouldn't be surprised if they kicked that out to June and it was toward the end of Q2 when they issued that guidance. But as for now, that is on the docket for May this year.